46% of adults in the UK now participate in some form of supplemental work. That's nearly half the country boxing up orders, renting out space, or freelancing on the weekends. But the days of earning casual, untraceable cash on the side are officially over. As of 2024, digital marketplaces for physical goods, like eBay, Vinted, and Depop, are legally required to report seller data directly to HMRC. The exact same reporting mandate applies if you sell services or rent out assets on platforms like Fiverr, Upwork, or Airbnb. The tax office now sees the transaction data the moment the platforms do. Because this data is shared automatically, crossing a tax threshold without declaring the income puts you on a direct path toward late filing penalties and interest charges once the tax year concludes. To stay compliant, you need to target one of these two HMRC-approved tax-free thresholds, £1,000 or £7,500. Maximizing your take-home pay under these rules requires making a strict choice up front. You are either monetizing your spare time, or you are monetizing your spare physical assets. Because the data is already in HMRC's hands, strategically categorizing your hustle into one of these specific allowances is the only legal path left to keeping every penny you earn. If you are a freelancer, a gig worker, or a casual seller, your primary framework is the £1,000 trading allowance. The catch is how HMRC calculates that number. The limit applies to your gross revenue before you subtract platform fees, shipping costs, or materials. If you break that down, it strictly caps your tax-free earnings at just £83 a month in total sales. Stay under that monthly cap, and you never have to register for self-assessment. You keep the cash and avoid the paperwork entirely. If your sales creep over that £1,000 mark, you have a second option called partial relief. Instead of tracking every single shipping receipt or material invoice, partial relief allows you to simply deduct a flat £1,000 from your total income and only pay tax on the remainder. But if it costs you £1,500 in materials to make £2,000 in sales, claiming that flat £1,000 deduction means you are paying tax on £500 of imaginary profit. The trading allowance is an excellent vehicle for low-overhead pocket money. If your hustle requires heavy upfront costs, staying in this framework will actively drain your profits. For those willing to monetize their property, the Rent-A-Room scheme offers the highest tax-free threshold available to individuals in the UK. The rules are absolute. The income must be generated by renting out a furnished room located entirely inside your primary everyday residence. Meet that requirement, and you can generate up to £7,500 in rental income every year, completely tax-free without ever filing a tax return. Check the title deed. If you jointly own the property, that £7,500 allowance is automatically halved to £3,750 per person. By utilizing this scheme, you forfeit the right to deduct operational expenses. New mattresses, cleaning fees, or repair costs cannot be written off. If your expenses outpace your rental income, perhaps you spent £8,000 remodeling the room to make £5,000 in rent, it is financially advantageous to opt out of the scheme so you can claim the $3,000 loss against other taxable property income. Claiming those losses requires you to manually track every receipt and formally submit a self-assessment return to HMRC. Monetizing your assets yields a substantial tax-free return with zero administrative work, provided you are willing to sacrifice your personal space to get it. Eventually, you may want to transition your operation from a casual side gig into a scalable, high-revenue microbusiness. Moving past these tax-free caps is a strategic choice to scale your revenue into a sustainable, professional income. Once you declare your business, you gain the ability to deduct pre-trading capital expenses. The high-end laptop, the specialized software, or the heavy machinery you bought to start the business can now be used to lower your tax bill. Direct, but stepping over the limit mandates that you register for self-assessment and formally report your earnings. This chart shows how your side hustle profit stacks directly on top of your primary PAYSE salary. Depending on your day job, those extra sales could easily push your total income over the line into a higher tax bracket. Scaling aggressively also brings you face-to-face with the new Making Tax Digital mandate arriving in 2026. Any sole trader crossing £50,000 in gross income will be legally required to maintain digital records and submit quarterly reports to HMRC, rather than just filing once a year. To build a highly profitable business, you have to let go of the goal of paying zero tax. The objective shifts to rigorous compliance and maximizing your net profit after HMRC takes its cut. There is no single correct way to handle side-hustle-talte. The optimal strategy depends entirely on your real-world resources and expenses. This flowchart maps out the decision. The first question to ask is whether you have a physical, furnished room in your primary home available to rent. If you do, you take the asset-rich path. Claim the £7,500 rent-a-room scheme and enjoy the high-yield, tax-free income. For everyone else, the deciding factor is your overhead. Are your annual side hustle operating expenses higher than £1,000? If you keep your expenses low and cap your gross earnings at £1,000, you are a casual seller. You maintain a completely admin-free life with zero tax returns to file. But if you have high overhead or your revenue ambition goes far beyond pocket money, you are a micro-entrepreneur. You must accept the administrative burden of self-assessment to properly deduct your costs. Trying to force a high overhead operation into a zero admin tax bracket is a fast way to lose money. With digital platforms now reporting every transaction directly to the government, ignorance of these three paths will not protect you from an audit. Mastering the 2026 side hustle economy means letting go of the myth of unlimited tax-free money. You must look at your assets, calculate your expenses, and execute the exact framework that matches your ambition.